Time to check in with our business editor, Ticky Fullerton, this afternoon. And Ticky, look, not a great day on the markets, or indeed when it comes to consumer confidence figures are out today. Tell us about the markets, first of all.
Yes, well, as you say, David, overall market down 0.72% today. I think less to do with consumer confidence, more to do with these jolly old trade wars between the US and China. Certainly, the blacklisting from the US side of Chinese company, including, I think, 8 tech companies, travel bans, and the Chinese saying they're going to come back. This is all ahead of another round of talks late in the week. Whether this is elephant bumping or not, market didn't like it. You mentioned those consumer confidence figures. Well, they hit actually a 4-year low, the Westpac Consumer Confidence Index. Now, there is some suggestion that maybe this is even though the rate cuts are happening, that perhaps the sentiment out there is that these rate cuts are happening because we're in a bit of an emergency and it's sort of counterproductive. But nevertheless, the thinking seems to be that more rate cuts are on the way to try and solve this problem.
Yeah, well, we're going to talk more about these confidence figures in a moment with one of the Westpac economists. Ticky, a couple of stocks that were hit particularly badly today, AMP and Flight Centre. Now, why was that?
Well, yeah, AMP came off 4.2% to a record low. So Francesco Di Ferrari, the relatively new CEO, has got his work cut up for him. Look, I think this is a couple of reasons. Some people are pointing to one of Australia's oldest investment houses pulling off the register there, coming no longer a shareholder. That was AFIC. But also, I think the remediation stuff that we've been talking about, ANZ and last week NAB, there's a feeling that there might be more to come at AMP. Now, Flight Centre was the other company, 12%. It dropped today, and the reason for that is a profit warning. We might hear a little bit more about this at their AGM on the 7th of November, but profits for the first half look like they're going to be pretty dire, and largely because some of their markets that they really enjoy a lot of value from, the UK and the US, are in a bit of a dodgy state themselves. So I think that's probably what drove the warning there.